everyone. Welcome to another episode of In Conversation by Advisorkhoj. Today in conversation, our guest is Mr. Anunaya Kumar, President, Head of Sales and Distribution with 361 Asset. Anunaya has over 26 years of experience in sales and distribution, and he's been with 361 Asset for now 3 years. Anunaya has been at leadership positions with Invesco Mutual Fund, as well as DSP BlackRock Investment Manager, prior to joining 361 Asset. Welcome, Anunaya, to In Conversation by Advisorkhoj.
Thank you, Suren. Thank you for a nice introduction. Looking forward.
Our pleasure, our pleasure. So, Anunaya, today's In Conversation is very interesting because I'm having a conversation today with an asset management company, which is a perfect blend between alternative products as well as the mutual funds. So the first thing when we look at, or when we think of 361 Asset, the first thought which comes in the mind is creativity, innovation, and best in the class alternative products. Now that you are looking to go deeper into the mutual fund space, how are you strategizing this?
Thank you, Suren, once again. A very good question, very relevant question as well. So let me put it very clearly. We aren't looking at diluting by any means our positioning of being alternate specialist.
Mm-hmm.
We will continue to be innovative, ideation. I think those are going to be core to our business. What we are further doing it is to expand our business within the listed space and getting into mutual fund, wherein because the thesis is very simple that when you are into alternate assets, you are basically looking at addressing the clients where minimum amount investment is close to 5 million or 10 million, but there is a far larger base wherein the interest to investing into capital market is pretty much there. Corpus may not be. Second thing that I have realized is that whatever you do, even today, the mutual fund is the core to a client's portfolio. You can't use that. Now, why do I really want to miss that bit of that large portion of the business, which is into mutual fund? And hence, as a strategy, we are progressing into mutual fund as well. But as I said in the beginning, by no means we are looking at diluting our alternate specialist, as being the tag which we had been enjoying for last almost a decade.
Sure. Sounds good. So currently you have 4 equity schemes, one each in hybrid, fixed income, and money market. So there is a lot of opportunity for you to launching more equity mutual fund schemes. So what are your thoughts and plans ahead on that?
Contrary to looking this as an opportunity to launch more, I would rather say I don't think we are really interested in launching many more.
Okay.
Except maybe one scheme which we feel has a need amongst the investors' portfolio today, which is a multi-asset. I think we are missing in that space currently, and we certainly would want at a right time, at an appropriate time, launch a multi-asset fund. But besides, if you see our basket of offering on the mutual fund side, we have very strategically picked it.
Mm-hmm.
Like our flagship fund had been a focused equity, which is shared below 10 years of its existence and being very consistent. We knew the limitation of a focused equity, it can't go beyond 30 stocks. And hence we have a fund called a flexi cap, which gives, literally ability for the fund managers to go with no restrictions on the number of stocks. So flexi just give a better horizon and a landscape to invest. Then we have a quant fund, which is a smart beta and picking on a model stocks, which is pretty much a passive in nature. Only twice in a year you can rebalance the portfolio. We have an ELSS, which is very unique. It's a passive ELSS because we realized in an active assets over a 3-year, almost 70% of the assets were underperforming. And hence we felt why to add one more. Let's have a passive ELSS. And then we have a balanced hybrid fund, which when we realized that post the 1st of April of 23 rather, when this taxation benefits were taken away, there's a lot of money in the fixed income space, which is looking at getting parked. And for them to have this, indexation benefit, this balanced hybrid fund as a category, always being there, but not any fund occupying it. So we launched a fund in that space, So if you see, a journey from a focused, flexi, quant, ELSS, and a balanced hybrid. One message is very clear that each of the fund are very clearly categorized and very clearly positioned and catering to the investors' needs, specific needs. Now, if I go a little beyond, I can only think one more fund which is currently missing, which is a multi-asset, because that is one space which is completely missing in our portfolio.
Sure.
And that would be the only one that eventually we will add up at
Sure.
the right time.
So pretty much a restricted basket on the mutual fund equity size, and
Absolutely.
more focusing on them, and maybe a launch of a multi-asset sometime soon now. Sure. Anuna, since you have, like I mentioned earlier, a perfect blend of mutual funds and alternative products as a fund house, as an asset management company. So today, a lot of advisors and a lot of mutual fund distributors are warming up and taking alternative products to their clients. So what has been your experience in ensuring that your products, alternative products, are also being advised by advisors and of course being showcased by mutual fund distributors to their clients? So what has been your experience in that journey?
So I think it's been pretty encouraging. I could see a lot of appreciation coming into us, both from the clients as well as partners,
Mm-hmm.
when it comes to looking at our offerings.
Mm-hmm.
So they certainly appreciate us on our innovations, on our ability to ideate, keeping the basket lean and clean,
Yeah.
not to do too much of jumbling. They really appreciate the way we have managed, especially the performing credit fund during the testing time of a COVID, and the way the fund has seen through that tough time. It speaks volume of our ability to manage the credit as a space. They seriously appreciate the processes that we follow across the strategies and the way we engage with our clients. They appreciate that. They appreciate interacting with the teams, the experienced team which are on the ground, the way this team puts everything in a very simple manner, which is easy to understand and in a way react. They really appreciate that. They appreciate the engagement that we have established over a period of time through multiple communications, be it on a macros of economics, on the fund related information. They seriously appreciate that. And lastly, they appreciate both the pre-boarding and the post onboarding experience,
Sure.
both in terms of managing the TAC and ensuring that the experience is pretty seamless for
Uh-huh.
them pre-onboarding, and once they get onboarded in the system, the way their journey is, in terms of be it their client service requirements, the TAT is getting managed on that. I think it's a complete package, which is where they appreciate right from the product to processes,
Sure.
which
Sure.
define complete engagement.
That's great. So the next related question is, have you taken any initiatives in terms of educating them or training them? Because alternative products generally are a bit more complicated than the mutual fund products.
Yeah, you're very right. I think one thing which is really needed in the industry is also to uh, build the skills
That's right.
of taking the proposition out with the clients, because the
Mhm.
fear factor also becomes pretty high. So what we do, we have got a Know Your Fund House as a proposition where we invite our partners to our office, get them a chance to interact with the senior management and hear them out why and whatever we are doing, what's the rationale behind it. Uh, we always have ensured that the communication that we are building it with our partners, be it a vocal or through the notes, they are very simple, easy to understand, so that people are able to grab and probably be able to express. We have also done a lot of work on training these people,
Mhm.
well, with an objective was always to ensure that these people eventually also get certified through their NISM and all, so that they can actually take the proposition out to their clients. But while doing it, we also ensure that we are making this training program very extensive, so that they really get to know the real product propositions. What are the
Right.
Cat 2, what are Cat 3, what are kinds of Cat 2 funds that you have, what are taxations involved into it. These are actually the stuff which brings in the complexity, as you have said. The product is not complex, it's simple.
That's right.
Multiple times, it's the incidences which are attached to the product, they become little complicated. You're asked to talk on the taxation rules, when you're asked to talk on the document which gets shared, the communication which reaches out to the client, the different forms, and those are the ones which creates inertia among the partners to take it to the client. So I think we are trying to address through our own training program, and people are appreciating it.
Very happy to hear that, because it's very, very important to, break that ice with the mutual fund distributors, that alternative products are not that complicated as they sound to be complicated. Right. So one question is that when you're meeting mutual fund distributors across the country, and of course you're having your equity schemes on the one side of mutual funds, and then you have your alternative products on the other side. So don't they ask you a question कि सर कौन सा product better है, कहाँ पे invest कराएं client का investments? How do you answer that question?
This is a very common question. I'll tell you, this is
Yeah,
a very, very common
and I'm
question.
sure. Yeah.
But my answer is very simple. That's exactly the answer that I give it to everyone. See, you can't have a generic way of looking at it, because at the end of the day, whose money are we talking? We are talking the money of the end client, the
Right.
customer. The customer needs are very different. He has a different risk appetite. He has a different return expectations. His liquidity needs are very different. His time horizons could be different. So for one to say that performing credit in the credit is a space to look at may not be the right answer. Private equity is a great asset to consider, not a great answer, because both the asset classes might, even if they have a potential to create better returns, but they also come with a strong problem or a challenge of liquidity. So you would need to have that kind of time horizon, 5 to 7 years, to remain stay in the investment. Now, is this what is also a need of a client? We don't know. Uh, his return expectations just are not there. He's happy. He's happy having a balanced hybrid fund, which is looking at, or an attempt is to better the return of a fixed deposit, and he's happy with that. Then why are we going and telling him, look, my friend, there is something called a performing credit. It's also credit space, but it can give you a better return potentially. While we don't know, but structure is such, higher the risk, it has an ability to create a better return.
Yeah.
But that's not the need. Someone has a need of a flexi cap kind of a fund. Why should I tell him a focused equity fund? A concentrated bet, obviously the element of risk goes up, the beta goes up. So my answer is, it is to each one. Yes, for one to consider, if client profiling permits to have certain portion of the assets in the alternate, answer is yes, one should have. Now, what is that? Or is there a need for that at all? I think that is something which should be left only with the advisors, because advisors knows their client the best.
Sure. And what has your experience been? So even after explaining them so much, what kind of percent of clients' investments are they investing in your alternative products as well as your mutual fund schemes? What has your experience been?
So,
Because the way you explained is brilliant, but what has been the outcome been?
so I'll tell you, Suren, we are still at a very early stage.
Right.
I think see, we are in early stage on the capital market only. If I look at the penetration itself, it's just 7% of the household saving.
Yes.
Even if we talk about a 54 lakh crores and a 28 lakh crores being in the equity and hybrid together, and I'm not even including alternates into it, and a 30 lakh crores of a PMS, if I include entire PMS basket,
Yes.
it might look huge. But even if I look at a penetration to the household saving, we are still in a single digit. So the reality is, I think we are very far away to talk about what is the penetration of alternate in the client's assets. Actually, one should talk about what is the penetration of capital market in client's assets. That itself is very low.
Very true. Yeah.
So,
Very well said.
you are right. It is low. But if I look progressively, I can see acceptance to alternate asset is growing, especially with better skilled advisors, and many of them now becoming mutual fund distributors, MFDs, ex-bankers, so on and so forth. The good part is the knowledge is there, content is there, and their ability to explain to the clients is also becoming better and better.
Yes.
With this inertia going away, I can only say to you that, that day is not very far where a reasonable proportion of assets would be from the alternate in the
Mhm.
client's portfolio. So it is increasing, but it still hasn't reached to the level where one should be
No,
seeing.
I'm sure we'll be there soon.
Yeah.
So, Anunay, if you could also share with our viewers certain strategies which you are running on your alternative products, which is the PMS and AIF, on also certain in-house models that you've created for these products, please.
Yeah, thank you for this question. Yeah, very pertinent one to us. So let's start with the PMS to begin with. I think we have two strategies on the PMS. We call them multi-cap and Phoenix. Multi-cap is more investing into predictable businesses with a strong track record of on an ROE and a PAT. And that's been the dominant part of the portfolio.
Sure.
Phoenix is just very complementing to the multi-cap, wherein we are looking at investing into the companies which are on the J curve, turnaround stories. So they both complement each other very well, both the strategies. On a listed, staying in the listed side, if I go to alternates, which is category 3 alternates, we have got two funds again over there. We call them Equity Opportunity Fund Series 1, which is pretty similar to what the Phoenix does, which is to invest in the turnaround stories and the portfolios which are on the J curve.
Sure.
Other fund, we call them Equity Opportunity Fund Series 2. Now, this is a very unique strategy because it talks about investing, being in the market, and also bring the hedge portion into it. So what we do is we look at the market on a price to book, and that's the framework. And every time we feel the markets have gone slightly in an expensive zone, we start building hedge through the buying the options, nifty options of a duration between 1 to 3 years.
Sure.
What it does, it lets the investor stay in the market and also build some kind of a protection by virtue of investing into the options route.
Sure.
So that's a very unique product that we have got on the listed alternate side. If I go to the private equity, we have got two strategies running currently. One is a healthcare fund, which is looking at investing into the early stage to mid stage healthcare strategies. And then we have got a fund which is on the secondaries, looking at investing into the secondaries opportunities to create liquidity into the private equity kind of markets. If I look at the performing credit, then we have got a fund which largely invest in the bucket between 14 to 16% assets. That's the fund that we are currently running. So this is the basket of offering if I look at the listed private equity and a performing credit, and within listed alternates as well as the PMS.
Sure. And where do you believe the maximum investment flows are coming in at this point of time? What strategies are being more warmed up by the investors as being well received?
I think it's again listed is attracting the most of the assets. And markets are doing pretty well. I think people do see lot of excitement in looking at the listed equities and all. That's the space which is seeing the flow as well. Interestingly, if I look at the performing credit, I think, or rather fixed income, not the performing credit per se, but a fixed income is a space again which I started noticing a lot of assets, anticipating. The general belief is that we are towards the fag end of the yield curve, and the yield curve should get inverted from here, and the people are seeing an NAV movement potentially getting built up in fixed income asset, the duration and all attached to it. So that's where I've started noticing that some bit of flows have started increasing.
Interesting.
Multi-asset is something which is seriously seeing some serious flows. Of late, I was doing some analysis at the industry level, and I was very happy to see that multi-asset is getting. So basically, the investors or the distributors mind approaches that let's not apply mind which asset is going to do well. Let's take a multi-asset and let the fund manager only build
makes sense
in such a way that whichever asset class starts doing well, you are contributing to it.
Sure.
So that is the way we are noticing that the flows are. But undoubtedly, listed is the flavor as we talk.
Listed continues to be more of the flavor as we speak.
Yeah.
Sure. So now, if you could also tell our viewers in terms of, your sales team size, your structure, how many branches are you available currently at? And because since your focus now, of course, is now increasing more on the mutual fund side as well. So do you plan to open up more branches, or you're looking at, more phygital format of growth?
See, Suresh, let's understand where are we progressing. See, at the end of the day, we are progressing into an era which is actually moving on to the palm.
Right.
You know, so if I go to Gen Zs or if I go to a Alpha Next, the
Yeah,
generations, they're not interested in meeting you and me in physically. They're not interested.
absolutely.
What are they interested? Their interest is only, are they able to execute digitally, or are they able to draw information that is needed digitally?
Sure.
These two needs are getting addressed. Then they're least bothered whether you're sitting in Coimbatore or whether you are sitting in Bangalore or sitting in Bombay. They're not
Sure.
interested. Now, what are we doing? We are also following the same path. First of all, getting back to your first part, we have presence in 12 locations. We are adding 2 more, and we will be probably covering another 9 locations through the satellite approach.
Sure.
Like for example, if I'm stationed out of Lucknow, I can cover Kanpur from Lucknow.
So
Like,
23 locations in a
so
way.
that way you can say 23 locations.
That's a very well spread
Yeah.
across.
And I have a team of around 20 odd people, which eventually will be around 30 odd member team on the sales side. Plus client experience team reports into me. So that's another addition to the teams that we have.
Sure.
By virtue of all of this, if I look at my locational presence and my additions and the satellite, I'm covering close to 80% of the market, which is currently available with the national counters.
Sure.
Because let me use some barometer to look at it. So I'm absolutely covering close to 80% of the market. Now, coming back to your second part, which was I started addressing the first part as well, which is the physical or a digital or a physical. So we are very clear that we would want to be a serious player in the mutual fund side, but we would also want to build a lot of property on the digital side.
Digital side, sure.
So it will be more of a, because the alternates, whether you like it or not, you have to have a physical interaction, because these kind of products need a lot of explanation.
Yeah.
But mutual fund is a commodity.
Yeah.
If I'm able to disseminate informations efficiently, both to my partners and through my partners to the end clients, if I'm able to engage with all kind of literature that is needed, to upskill their knowledge as well as to provide the information of their investments, then believe you me, my fund is better than your fund, or someone else's fund is the best in the industry. Seriously, you don't need me, because your systems are far and more robust to tell me, man, you are telling you're the best, but actually you're not the best. Because my system tells me you are number 4.
Mm-hmm.
Now, for me to hear that I'm number 4, is it needed for me to be available on your doorstep, or is it more important that I should provide you all the information which would help you to come to the conclusion whether I'm good or not good?
Sure.
So
Sure.
what are we doing? We are building a lot of digital properties. We are trying to build a lot of data analytics so that we can help our partners, and we can be able to reach out to the partner more efficiently and effectively. Plus my branch presence, as I said, is going to be 23, which to me is a pretty large. I'm pretty much covering the large major metros and the minor metros, plus the towns which we feel are the town where the future lies.
Yeah, absolutely. And with the plans of 9 satellite cities plus 2 more branches, which is almost 23 cities, that's a very good coverage across the country as well. And communication being the key in this business, of course, is being well taken care by the digital, innovation, which you're anyway will be taking up, or rather is being taken up.
Absolutely.
Could you also give some insights about your investment management team?
Yes. So I think that's a very unique structure that we have. So if I talk about our ability to manage clients' money, I can pretty much put them in 4 buckets: listed, private equity, private credit, and the real assets. For you, it will be surprising for you to know that actually we have a CIO for each of the categories.
Oh,
So Anup Maheshwari, he is the CIO for the listed space. Samir Nath is the CIO for private equity.
right.
Akash Desai is the CIO for performing credit, and Amar Mehrani is the CIO for the real assets. Each of the CIO have their own team. But the good part is the ecosystem is such that all the four CIOs along with their team works very closely with each other. And while doing so, they are able to draw a lot of inferences from each other's experiences, which in a way help them build their own strategies and ability to take a decision whether they would want to own the asset or not.
Sure.
It's a great ecosystem which works. Collectively, if I look at all the four strategies and the team together, we have an investment team in excess of 50 people. It's a huge team, 50 plus.
50 plus.
That 50 plus. That speaks volume, Suren, to what extent are we really concerned of our investors' money
Right.
and putting all our might in ensuring that we create a product in a way which is largely in the interest of the clients. So 50 plus is the size of the
Yeah,
investment.
that's a very, very large size. That's a very, very large size. No wonder the creativity and innovation and the best in the class alternative products, are housed at 361 Asset. Wonderful, wonderful to know. Through this in conversation today, Anunaya, what message would you like to give to investors in the current market situation, as well as the advisors and mutual fund distributors?
So I think the message is very simple. Probably you would have heard it from multiple people otherwise as well. I am a strong believer that asset allocation is the key to wealth creation.
Hmm.
The problems are on the behavioral approaches. We multiple times become the victim of these behavioral biases.
Mhm.
Like for example, herd approach. Now, my need could be very different from your need. Why do I need to have a herd approach? Just because you are following a certain path, I have to ride the same path. Not required. So, as long as you're holding on to asset allocation, which has to be which need to conform to your risk appetite, time horizon, liquidity requirement, it's core. And second thing is, enough evidences and enough researches have happened on that to say spending time in the market is much more important than timing the market.
So true.
Because no one has ever been able to time it to the perfection.
Absolutely never.
Just remember, Suren, that market is no one's slave. More we feel that we know the market, it can surprise us even more.
So true.
So if market is not my slave, it's not going to move on my whims and fancies, then what am I trying to attempt?
Absolutely.
See, it's again proved that cash is the biggest drag in the portfolio. Building cash is not difficult. You may be right, but are you able to effectively or efficiently deploy the cash back? That's critical.
Very true.
If you aren't, then why are you trying to time it?
So correct.
So idea is, as long as you be attentive to what your mind and heart says.
Absolutely.
You keep your hands in the pocket and a feet on the ground. I think probability for you to go wrong.
Absolutely. Absolutely. So, like I always say, one must research like a hawk and invest like a monk.
Oh, absolutely. Very
And
true.
so, post investing, let it be passive. So great, Anunay. Wonderful, wonderful, chatting with you today, and a lot of insights shared by you today in terms of what are your plans about 361 Asset on the mutual fund side, as well as the alternative product side, and your growth plans going ahead. Thank you very, very much for taking out time and being a part of In Conversation by Advisorkhoj today. Thank you very much.
Thank you. Pleasure talking to you, Surya.
Thank you. Thank you. Bye-bye.